A lot of us talk about stock market bubbles or bubbles in real markets. What are stock market bubbles and what causes them to pop? Let's take a look. Welcome back to Be Rich. In most cases, we don't know that we are in a stock market bubble till the bubble has burst and a lot of people have lost money. A stock market bubble is said to happen when the prices of a stock rise rapidly above what a fundamental valuation can justify. Normally, there are two routes by which you can value a stock. One is what is known using the earnings that a company makes and the average price to earnings ratio. The other is, of course, a book value. That is the basic net asset of the company per stock. So, using those two metrics over a last period of so many years, there's an long term average on which the stock market is supposed to operate. Prices below that mean that the stock markets are highly undervalued, and when it crosses the mean and goes higher, then a market is supposed to be highly overvalued. When a group of stocks tend to grow very high fashion and they beat all previous expectations, then we are said to be in a stock market bubble. In the last 4 years, have not known except for a month or two, like in March of this year, when markets have not been in bubble territory. Markets twice, once when Trump was elected and once during the corona pandemic, corrected deeply and rallied like there is no tomorrow. Today, the markets are trading at nearly 35 times earnings. The reality of the market is completely different. In the real economy, there is no credit available. Businesses have not recovered. Many large businesses have shut down. Employees have cut salaries by 30%. And a report in Mint says today that for daily labor, salaries have fallen by 23%. Yet, the stock market is continuing to rally only based on hope. Even if the market economy becomes normal, this market cannot justify valuations in 2022. Then, what is driving this market? What is driving this market is huge liquidity being pumped by all central bankers, including the Reserve Bank of India. Today, inflation is way above their comfort target of 6. In fact, for the last 7 months, inflation is above 6%. And in last month, inflation it reached 7.67%. Yet today, the Reserve Bank governor kept his accommodative policy open, allowed the market to have excess liquidity, and has said that the policy will be accommodative for some time to come. Interest rates represent cost of money. So as long as the cost of money is very low, then there is no gravitational pull on the prices of stocks, and the prices of stock keep increasing. In America, the Federal Reserve has entered the market and has said that they will keep producing giving money at 0% interest rate for foreseeable future, even up to 2 years. Not only have they done that, they've also gone and entered the bond market and bought not only bonds of A grade corporates, but also a bond ETFs. This kind of liquidity has spread into the asset prices, and the asset prices have continued to increase across the world. We mask ourselves by looking at the dollar and feel that the Indian rupee dollar equation is same, and therefore the rupee has not depreciated. But when you look at the British pound and see where we are, then you will know the reality that while we are held parity with dollar to the extent, we have lost value against the British pound and the euro. All this means is that this easy liquidity available in the market has pushed the prices of stock way above normal. Last year month alone, 50,000 crores of rupees, nearly $8 billion dollars in a single month came into existing Indian stocks. Most of this money is chasing very few stocks and creating a huge surge for demand for Indian stocks. This is not only Indian stocks. Stocks all over the world have gone up through the roof. In America, a company like Tesla, which has made profits only for 5 quarters in a row, has become the 10th most valuable company. The availability of liquidity has distorted the markets beyond all means. Is this the only time has this happened? Has this not happened before? Well, every 50 years, 60 years, we see a massive bubble and a bust. The Japanese bubble of 1989 was when the Japanese index went to 40,000. The Nikkei was at 40,000 when the bubble popped. It dropped to as low as 8,000 and has never touched 20,000 again. These bubbles are as old as mankind, and but we have had records only for 500 years. The first known bubble is the tulip bubble, followed by the South Sea bubble. Though there have been several panics, the other big panic was the Great Depression of 1929. As far as India is concerned, we had this kind of rally with Harshad Mehta, followed by Ketan Parekh, then a major rally on IT stocks. All this means that these bubbles are very difficult to spot, and when the momentum is there, most retail investors do not throw caution to winds and want to be willing participants. When markets are continuing to grow every time, the herd mentality means more and more people buy stocks. In India, these stocks are done through Zerodha and Upstock, while in America, it is done by the Robin Hood app. In America, you can buy in decimal multiples of the common stock. That is, if you want to buy a Class A Warren Buffett share, Berkshire Hathaway, if you want to buy a full share, it costs you about $3.5 lakh. Fractional ownership is allowed, and you can buy an interest in Berkshire Hathaway for a few $1,000s. These kind of easy money, fueled by no work, is pushing this bubble. Like Seth Klarman once said, we know the end will come, only we don't know when. But when it comes, a lot of people are going to hurt. Thank you for watching. Be rich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Be Rich.